The next year and a half is when it starts to turn a profit. But that is the short-term suffering for the long-term benefit that they must undertake in what is still this 4-year-long green tidal wave unveiling. In the end, though, Musk will continue to innovate, especially when it comes to Cybertrucks. Because if you give them a microphone, you never know what will happen. Sure, adoption of EVs in China and Europe is above 25. But last year, the U.S. sold roughly 7.6 of passenger cars were. So even if you remove the concerns about interest rates and the cost that causes for the consumer, the two largest items on the right side of the EV, yes, the cost of the vehicle comes first, and that is related to interest rates. But it is also evident that the cost of the vehicle is larger, and range concern comes in second. We have a thrilling video for you today, SL Charging Infrastructure Awareness. Renowned analyst Dan Ives has made a daring prediction. In this video, we'll take you on an exciting ride through Tesla's recent victories in the Chinese market, where insurance registrations are soaring, signaling a potentially record-breaking quarter. But that's not all. The Cybertruck is revving up to change the game, and fully autonomous technology is set to redefine the entire industry. Why might Tesla stock double this January? Well, it all comes down to Tesla's core performance, which appears to be surpassing expectations in ways you might not have imagined. What effect might these events have on Tesla's stock? Dan Ives' forecast of a stock market boom coming to pass. Join us as we decipher these mysteries and provide an overview of Tesla's revolutionary journey. Will the firm reach new heights in Q4 thanks to its innovative steps and calculated maneuvers? There is only one way to learn. So remember to like, and for the most recent information and professional analysis, subscribe to Tesla Insights. Let us delve into the fascinating realm of Tesla as we excitedly await the company's core earnings report and deliveries. Many are curious as to whether this quarter will see yet another record-breaking performance. Elon Musk's Tesla has continuously exceeded expectations by navigating. We turn our attention to Musk himself, a figure who dances to the beat of a different drum. His approach is frequently mired in controversy, raising a crucial question. Does Musk's unique style attract or repel consumers despite the debates? Musk has persevered through challenges like the pandemic and chip shortages while remaining at the forefront of automotive innovation. Musk has unquestionably had a significant impact on Tesla, particularly with projects like the eagerly anticipated Cybertruck, such as recent actions such as purchasing Twitter, and his outspoken personality have further added an element of unpredictability to Tesla's journey. However, as we ponder these points, we also need to take into account the larger picture of the electric vehicle market in North America. There are signs of shifting consumer demand for EVs, and companies are adapting by lowering prices and reassessing their billion-dollar investments in EV technology. We'll navigate through the complexities of Tesla's current position and speculate on its future to ensure our viewers are well informed about one of the most dynamic companies in the world today. Let's turn our focus to the electric vehicle market in North America, particularly the United States, where the dynamics are rapidly evolving despite significant strides in EV adoption in regions like China and Europe, where the rate exceeds 25. Tesla's upcoming report is not just about numbers, it's about understanding the future trajectory of the EV market and Tesla's role in shaping it together. The United States lags behind with only 7.6 of its passenger cars being electrified. This discrepancy begs the question of what influences the American market. The US EV market has two main obstacles: the high cost of vehicles, and the adoption of EVs is currently facing challenges due to concerns about range and charging infrastructure, which are further compounded by external factors such as fluctuations in interest rates. Fortunately, there is a bright side. A growing number of models from both established EV manufacturers and legacy automakers are anticipated to lower the cost of advanced technology. A major step forward in strengthening the country's EV infrastructure has also been represented by the U.S. government's commitment of $7.05 billion to the National Electric Vehicle Infrastructure (NEVI) funding. This strategic investment is expected to be crucial in removing one of the biggest obstacles to the widespread adoption of electric vehicles. The accessibility and availability of outlets for charging. A substantial percentage of this investment will go to expanding the nation's EVA charging station network. This expansion aims to eliminate charging deserts by strategically placing charging stations so they are accessible in both urban and rural areas. A portion of the money is anticipated to go toward creating and implementing quicker, more effective charging technologies. This development indicates that EVs will be more handy for longer thanks to shorter charging periods. Traveling and daily usage, ensuring equitable access to EV charging infrastructure is a primary goal of this program. Underserved in rural areas by addressing range anxiety through a more robust charging network, this strategy seeks to close the adoption gap between EVs and various socioeconomic sectors. This investment is likely to boost consumer confidence in EVs, which is crucial for increasing EV sales and moving more drivers away from traditional combustion engines. It is anticipated that the development of EV charging infrastructure will boost economic growth and generate a large number of jobs. In the U.S. government's $7.5 billion investment in the National Electric Vehicle Infrastructure funding is a significant step toward a more sustainable and EV-friendly future. It promises not only to enhance the current EV charging infrastructure, but also to drive innovation, economic growth, and a more equitable distribution of EV resources. Construction, maintenance, and technology sectors related to EV charging are also anticipated to benefit from this government initiative, which may also serve as a catalyst for private sector investment in EV infrastructure, leading to further advancements and innovations in this field, laying the groundwork for a more environmentally friendly and interconnected transportation network. As we learn more about the impact of the active interest rates on EV pricing and sales, as evidenced by the recent changes in vehicle pricing strategies and consumer incentives, higher rates present a challenge, while the return of $7,000 from $500 federal tax credits is a welcome relief for consumers. Eligibility requirements and price points still need to be taken into account. Automakers' developing methods reflect this shifting terrain. Some, like Ford, have adjusted their sales approaches in response to market demands. Tesla intends to increase manufacturing of its Model I and Model 3 automobiles in order to meet its goal of delivering 1.8 million vehicles by 2023. To reach this goal, Tesla's new plants in Texas and Germany are essential. These two models, which make up 95 company's entire output, include the company's performance in the upcoming years, will be largely determined by its ability to handle the complicated interaction of production capacities, market demand, and economic considerations, which is central to its strategy. According to Tesla's production plans, the company will produce a significant increase of over 50 more vehicles than it anticipates, which is notably 10 times greater than the growth of the global car market. This puts Tesla in a potentially groundbreaking position when it comes to the specifics of the product. If this objective is accomplished, Tesla's combined production of Model I and Model 3 vehicles is expected to reach an astounding 159 million units in just the first 34 days of 2023. Sales of electric cars by Tesla are probably going to surpass 2.1 million units in 2023. This milestone is more than just a figure. It's an important accomplishment in the automotive industry. To further highlight the significance of Tesla's projected sales for 2023, let's compare it to some of the industry giants. Selling 2.1 million electric vehicles would not only be a significant milestone for Tesla, but it would also mark a monumental shift in the landscape of the automotive market. If Tesla meets its sales target, it will surpass the sales figures of Volkswagen's Audi brand, a marque known for its performance and luxury. This accomplishment will attest to Tesla's increasing dominance in the EV sector, demonstrating its capacity to compete with established luxury automotive brands. Moreover, Tesla's sales estimates in 2021 would be closely trailing BMW's remarkable sales record of 2.5 million units. Automobiles, what forecast do you have for Tesla's success in the next quarters? Thank you for watching, and we hope to see you in our next video. If you've enjoyed our coverage and insights on Tesla Insights, please don't forget to like and subscribe to our channel. Your opinions and insights are greatly appreciated.